The next 24 hours may be the most important moment for Bitcoin in 2023. In today's video, we're going to be going ahead and discussing the macro and short-term charts, explaining why that may be the case. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at why the next 24 hours may be building up to be one of the most important moments for Bitcoin of 2023. We'll also be taking a look at why the next 24 hours plays a massive role in the next bull run, and of course discussing the short-term price action. By the end of the video today, you will not only have a complete understanding of the macro charts, the bull run, and of course the technical indicators, but of course the short-term price action, what to expect, and how to plan for the next move. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to our Telegram channel where we post updates, charts, analysis, videos, educational posts, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and of course the relevant economic news. If you are interested in joining our VIP group, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and everything else you need to follow the trade signals effectively. You'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our video chat, our help chat, and of course our news chat. Go ahead and contact me via the pinned comment or the most recent comment in the free channel. We do have an end of year sale going at the moment, so go ahead and get access. Let's go ahead guys and dive on into the video, starting on the market data. So the 24-hour volume has taken a little bit of a slump. We are down 42.32% in anticipation, of course, with that yearly candle close coming in very, very soon, about 24 hours from now. So 24-hour volume is sitting at a total of 79 billion. With the reduction in volume, we've seen a pretty sharp reduction in 24-hour liquidation, sitting at a total of 76 million over here, with 47 million coming from long positions and 29 million coming from short positions. If we take a look at the overall volatility index, we can see on both the 60-day period, we can see a reduction, and on that 30-day period, we can also see a bit of a reduction in that volatility, which is expected as we do move over the Christmas season, of course, the New Year season, and of course, guys, again, that yearly candle close. We do see again a lot of consolidation, a lot of compression, a lot of sideways price action going on, which is attributed to, again, or should I say reflected as the reduction in overall volatility with that volume and liquidations. So the last 20 or so days, we've seen Bitcoin more or less move within this parallel range. We're discussing exactly what is happening over here and what we expect next in the short-term analysis in today's video. Moving over to the DXY, we can see the DXY has actually found a base of support, again retesting this low range we've many times seen retests from. Again, back in the last 2 years, we've retested it about 3 times with one breakdown resulting in a nice flash crash. Again, now retesting it as of today. This level is assumed to be a base of support, meaning if we do break below it, we are likely going to see a correction towards our lower level of support, the area of which we retested in July 2023. This would be a very bullish move for the markets of Bitcoin, for cryptocurrency as a whole, and of course, the traditional financial markets. If we do see a bounce from this level, we could see a small bit of a pullback for the asset markets. However, the DXY would still very much be in a downtrend provided it remains below this diagonal trend line. If we do break above this diagonal trend line, we would then expect the DXY to move back upwards, potentially to 105. This could be bearish for assets such as the S&P, the Dow Jones, the Nasdaq, Bitcoin, and result in some turbulence or some pullbacks. So definitely keep your eyes on that one, guys. Moving over to the S&P, we can see we have breached that weekly high, actually creating a new all-time high here. In just under 24 hours, we'll be actually closing this weekly candle out, and this will be the highest weekly candle we have closed if we do close this weekly. Again, we do want to see a weekly candle close above this horizontal black line. this area is acting as a major level of resistance. A weekly candle close above here would be fantastically bullish, as it would flip this range into a range of support, facilitating a continuation upwards, similarly to what we have seen on the Dow Jones. Again, over here, guys, we've breached that weekly high, we closed up, and we continue toward the upside, making this level a area of support. Same goes with the S&P as it does with the Dow Jones. This area of support is again a bearish trigger point, meaning if we lose the lower range of the support, the trend will flip bearish on the weekly chart and likely push back downwards to retest this diagonal trend line. Same goes with S&P 500 over here. This level is going to be acting as a bearish trigger. This red line, a loss of this level, we'll mark this as deviation from the range, and a correction downwards on the weekly would be anticipated. Let's go ahead, guys, and jump over into Bitcoin. Now, before we do talk about Bitcoin, a quick word from Bitget and BingX, and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, guys, let's go ahead and jump into Bitcoin, and there is so much to talk about today. We're going to be discussing the short time frame price action, what we expect next in the next 24 hours, why the next 24 hours from a short-term perspective, and more importantly, from a macro perspective, is so significant in regards to the bull run, the 4-year cycle, and of course, the next 2 or 3 months of price action. So we need to overlay the context. If we take a look at this chart, this is going to be our 4-year cycle chart. What we can see is a 4-year cycle is segmented by a date range trend into 3 different categories. We have our bear market, okay, our red phase, we have our accumulation phase, our gray phase, and then we have our bull run phase, which is going to be this green phase. If we take a date range analysis between these phases, generally they last equal amount of time. We generally see around an 18 to 19 month bull run, we see around 11 to 12 month bear market, and we see around a 13 to 14 month accumulation. This pattern, this date range trend, has played out perfectly across now 1, 2, 3, 4, 5, 6, 7, nearly 8 phases of the 4-year cycle over the last 9 or so years. So it has a decent level of significance. If we take a look at where we are in the current phase, we are still technically in an accumulation phase of the 4-year cycle. If we apply a date range analysis, assuming the next monthly candle will open in January 2024, we can take a look. We have 3 months until the halvening and 3 months, according to the 4-year cycle, until we breach the bull run territory of the 4-year cycle. That tells us 2 things. Number 1, we have again 3 months of a price range where we could potentially consolidate, correct, or even continue upwards in. And number 2, it gives us a specific data point in terms of a date where we would expect the bull run to actually start or pick up from. So let's go ahead and take a look at the bull run and discuss, when does a bull run start according to the 4-year cycle, and what trigger points are we looking out for the bull run to start. So according to our structural chart, we have 2 significant lines that we look at. Number 1, we have our dotted trend line. We can see this has played out many times in the past. And number 2, we have our solid horizontal trend line. This is acting as a base of support. The solid horizontal trend line is very simply the lowest point Bitcoin reaches, okay, before a dead cat bounce after the all-time high has been printed. So all-time high, all-time high, we correct, we reach, we bounce. That horizontal trend line is now that base of support. We established that base of support quite early, and that base of support or resistance at some point acts as a horizontal trigger point going in the future for Bitcoin. After that bounce, we actually create a high. That high is going to be the dotted trend line, which acts as a bullish trigger point. We can see that has played out in the past. So we have two things we look for. Number one, a monthly candle close above the horizontal solid trend line. Every single time we have seen that, we end up seeing a rally toward the dotted trend line. And number two, we look for a monthly candle close above the dotted trend line, which results in the bull run officially starting. So in this instance, the dotted trend line is sitting at a price range of around 48,000. How can we be sure that when we break above this level, we enter a official bull run? We can do a very simple trend analysis based on the angle of the price action from the breakout of that dotted trend line to the all-time high in comparison to the all-time low to the candle of which we broke over the trend line. We can see in every single instance, the trend angle significantly increases the moment of which we breach that dotted trend line from around 35% to anywhere between 50 to 60%. A massively increase, or should I say, a sudden surge in the trend angle is a direct reflection of increased demand, increased volume, increased volatility, increased activity within the market over an extended period of time, which is reflective, or which I should say is descriptive of a bull run. So if we take a look at the chart from a structural perspective, we can say when we have a monthly candle close above the dotted trend line, we generally then enter a bull run. However, in both instances, we have only seen the monthly candle close above the dotted trend line within the bull run phase of the 4-year cycle. As we can see over here, we are not quite yet in that bull run phase, which leads us to believe we are not going to be closing above 48K until only after April 2024, which is 3 months. Now, that doesn't necessarily mean we are not going to see the close, or we could not see it early. There is a particular indicator that we can use, which is a leading signal for a monthly candle close above that level. That is going to be the indicator we're looking at on the right, which is the baseline of the Ichimoku cloud, reflected by the horrors, or should I say, this trend, this red solid line. Every single time we see a monthly candle close above this red line, we can see we had a breakout over here, we had a breakout over here, we actually see the price continue through and breach / close a monthly candle above the dotted trend line. So we know that a monthly candle close based on historical data, instance 1, instance 2, results in a monthly candle close above the dotted trend line. So to summarize it, if we want to see a monthly close above the dotted trend line, which will initiate the bull run, we have to first see a monthly candle close above the baseline of the Ichimoku cloud on the monthly chart, which is sitting at a price point of 40, let's take a look, give you an exact price, I think it's around $42,250. As we can see, the current market price of Bitcoin is sitting at $42,161, which is actually just shy of that Ichimoku cloud baseline. So we are sitting underneath it. That leaves us to believe two things. Number one, if we do manage to close the next 24 hours above the Ichimoku cloud baseline, the likelihood we will then close a monthly candle above the dotted trend line sooner than later significantly increases. However, if we fail to close the monthly candle above that baseline of the Ichimoku cloud, we could see a rejection for Bitcoin lasting as long as 3 months into the next phase of the 4-year cycle, which is going to be that bull market territory, where then we break above the monthly candle dotted trend line, like we have seen in the past, initiating that bull run. So two things to be paying very close attention to, guys. Let's go ahead and take a look at another 2 indicators on the higher time frame charts we are looking at. Number one, the market cipher A. If we look at the market cipher A, we see something very, very significant over here. This is going to be a blue triangle print. The blue triangle print has occurred in prior cycles 2 times, of course, indicating the 15-17 cross of the EMAs, or 2-3 cross of the EMAs, depending on what settings you have. Every single time we see a blue triangle print, we remain above the 50 EMA, which is the horizontal, which is the red line over here, until we create an all-time high. So to say it again, every single time we create a blue triangle, we will remain above the 50 EMA, meaning the monthly candle will remain above the 50 EMA until only after we create an all-time high, which then we would come back down and break below it. So in this instance, we have printed a blue triangle. According to historical data, we should now remain above 26.6k at a minimum until we create an all-time high, which is again further illustrating the fact that the monthly and the high time frame charts are following the same cycle we have seen in the past. And there is one more indicator we're looking at, which is the Bollinger Bands. Again, in 24 hours, if we close above the Bollinger Bands, that is going to once more illustrate a scenario which we've seen played out in the past, which is generally when we break above and close above the Bollinger Bands after a bear market, we see the price action continue upwards into an all-time high. Only then after creating an all-time high do we actually break below the midline, setting the base of support again at 26.6k, according to the 4-year cycle and according to the Bollinger Bands. So this also tells us one very interesting thing. If at any point we see the price break below 26.6k, this is going to be a shift in macro strength. So according to these charts, the macro trend is still up, provided we remain above 26.6k. Let's go ahead, guys, and talk about the short-term price action. So like we said, the next 24 hours for Bitcoin has massive amounts of significance in terms, or should I say in respects to the 4-year cycle, in respects to the monthly strength, and in respects to, of course, the next potential bull run starting. However, if we do not see the monthly candle close above that particular price point we discussed in today's video, that is not the end of the world. Again, like we've said, everything is kind of playing out a little sooner than we would expect because of the ETF narrative. And the ETF application, or should I say approval date, is actually pending during the first half of January. So it's going to be very interesting to see how that actually, moves the price action, whether or not it's going to be a flash crash, a buy the rumor, sell the news event, or whether or not it's actually going to push Bitcoin higher. It's going to be very interesting to watch that. However, guys, let's jump into short term. So short-term price action, there is but one range we are paying very close attention to. That is the current parallel range we are seeing here and potentially developing ascending triangle formation with the horizontal flat top of resistance and diagonal uptrending trend line we can see reflected as this dotted trend line. If we take a look at the current range, we can say for sure, guys, we have a trigger point sitting at the range high. This is a base level of resistance we have retested numerous times in the last few weeks, along with declining momentum within this range, tells us that if we do at some point breach this level of resistance, we are very, very likely to push towards our next level of resistance at 46 to 48k. So that is the only bullish scenario we're looking at here. Very simple, very quick explanation. If we break above 44.4k and we see that momentum flip positive, there's a very high chance we continue the price action through this range high and into the next major resistance at 46 to 48k. A quick refresher, 48k is a dotted trend line on monthly chart, a major point of resistance as we have seen in the past, but of course a major trigger point for a macro continuation higher, guys. If we go back to the short time frame price action, it gets more complicated when we are looking for pullbacks and rejections. Currently, this range is a neutral range with a very slight preference to a continuation upwards. The reason being, we have been creating higher lows in this price range, and momentum on the this price range over here is still slightly rising. So we have slightly rising momentum. This is overall compression against a rising uptrend and a flat horizontal resistance. This tells us we have very slight bullish accumulation going on within this price range moving into the new year, guys. Of course, if we zoom out, we of course have our major uptrending support line reflected as this diagonal trend line today, guys, if we do lose this level, that is going to be when the trend actually flips bearish. So moving over to the daily chart over here, we can see that diagonal trend line is actually reflected as this dotted trend line here. If at any point we lose this dotted trend line, that is when the trend we have established all the way back in October 25th of October will actually flip bearish. If we lose this dotted trend line, that is when we're expecting a strong correction toward the downside. If we remain above this dotted trend line, we are still expecting a continuation upwards to our next major level of resistance, which is 46 to 48k. So on the downside, guys, if we do lose this dotted trend line, that would be incredibly bearish for Bitcoin, provided that occurs before we reach 46 to 48k. If we do not reach 46 to 48k, but we break below this dotted trend line prior to reaching this resistance, that would mark this entire move here as deviation from a high time frame level of resistance and actually flip the weekly trend bearish. This would be very bad, and we would not like to see this actually develop. So moving back to the short time frame price action, guys, we are looking for a few scenarios over here. While we remain within this parallel range, we are really just playing it cautious and watching and observing the price action, particularly moving into the new year, particularly moving into the yearly candle close, particularly moving into the ETF news and expected approvals in the early phase of January. If we are looking for a continuation upwards, the first step, we are looking for a break above the RSI trend line, a positive flip in momentum, and a break above the horizontal resistance for a continuation higher. If we are looking for a continuation lower, again, we are looking for a break of the short-term dotted trend line, which will send the price action to retest the range low at around 40,500, potentially retest the uptrending diagonal trend line, which is a major uptrend we've established over the last 2 months. Only if we lose this level are we at any concern of the price action correcting on the higher time frame. Definitely pay attention to that, guys. We're going to sum up the video there. I hope you enjoyed. Tomorrow's video will be much more into the short-term price action and, of course, that yearly candle close. I'll catch you guys on the next one. Cheers.